Hey, Mario Gonzalez here with another homeowner or landlord money saving tip. This one is on avoiding those pesky capital gains taxes. So stick with me to the end and I'll show you the publications you need and how to do it. Hey, Mario Gonzalez here, and we're going to talk today about avoiding those pesky capital gains taxes. Now, this applies to all sorts of people, if homeowners, landlords, you name it, if you have ever occupied the home. And there's a special extension for military members, and we're going to talk about that. Now, again, let me start off. I'm going to kind of give who this applies to. It applies to homeowners and landlords. Now, it does not apply to just investors that have never occupied the home, okay? So there's some do's and don'ts that you have with regards to this. Now, there are two IRS guidelines that speak specifically about the military exemption that I'm going to talk about, as well as the rules for this. And the two IRS publications are, the first is IRS Pub 523. It's called Selling Your Home. And the second is IRS publication number 3, and it's the Armed Forces Tax Guide. We'll put links down below to both of these so you can access them quickly and also get them to your tax professional if you need this. Now, let's just talk about the basic rules that are here. The first and foremost, again, you have to own the home. It sounds dumb, but you have to own it. There are some people that say, well, I'm partners with this other person and it's in an LLC, or we've done this, or it's in a trust. Well, you have to be able to show ownership, okay? Now, for most people, I'm just talking about the normal landlord, the normal owner. You lived in the home or your spouse lived in the home, and either, if you're married, and either of those can basically show that you own the home and live in the home. Now, here's the second important rule, is the use of the home. This must have been your principal residence sometime, okay? There are some time qualifications with regards to this, and they base around when you were using this as your principal residence. So you were the owner and it was your principal residence. Now let's talk about the time here. For most people, for most homeowners, you have had to have lived in this home 2 of the past 5 years. Very simple. 2 of the last 5 years you had to occupy the home. So if you lived in there for 2 years, you moved out, you basically have 3 years to sell the home and not pay taxes. Here's where it's awesome for the military. The military gets a 10-year addition to that. So you have to be in there 2 of the last 5, 10, 15 years. They add 10 years to that. So 2 of the last 15 years you have had to have lived in this home. Now we get all sorts of questions. Well, what if I had broken service? I got out of the military and I came back into the military. What if I was in the reserves and come back? The stipulations, and you can look into the publications, say when you come to sell the home, if you are in the active armed forces, this applies to you. Now, I would say also that a lot of times your tax professional would say if you are in the reserves, this applies to you. But it's not that you were in for a short period of time in the Navy or military or Army, whatever, and you got out and then 15 years later you're trying to sell the home. No, no, no. You have got to be in the service for that 15 years or a broken service of some sort, reserve, whatever. So that's the time limit. 2 for 5 for most people, 2 for 15 for military. Now, let's talk about the exclusion. If you file your taxes single with one person, you can write up an exclusion up to $250,000. So $250,000 of profit you don't have to pay taxes on. Now, to most people, that's a pretty big gain in 3 years or 5 years of ownership in the home, but it can happen in some places like California. Now, and the maximum exclusion if you are filing married, okay, is $500,000. Now again, that's a pretty big chunk, either $250,000 or $500,000. But if you were in the military and you held that for 15 years, you can definitely see how you could reach those upper limits of an exclusion very easily. Now, let me be very clear as to who this does not apply to. So even if you are the owner of the home, it doesn't apply to a vacation home, a second home, a investment-only home that you've never lived in, or a commercial property. It doesn't. You had to have it as your principal residence for at least 2 years. So let's recap. It had to be your principal residence. You had to own it. You have to be able to show that ownership. You have to be in there 2 of the last 5 for most people, or for military, 2 of the last 15. Either spouse can be the owner and the one living in the home. Your maximum exclusions, $250,000 or $500,000, okay? And then the don'ts: no second home, no vacation home, no commercial, no investments, you name it. You have got to have it as your principal residence. And lastly, the 2 publications that are going to guide you here, the IRS Publication 3 and 523. And we put the links down there so you can get those. Now, we're always available for questions. We get questions all day, every day about real estate. You guys know we manage several hundred homes here in Jacksonville and Pensacola, and we also sell several hundred homes a year. And we give back to our military people when they buy or sell a home with us. So please, if you ever have a question, shoot us a comment on this video, write us directly, call the number there on the screen, and we're happy to help. Thanks so much, and we look forward to talking to you soon.